Thank you, Andrew. Some food for thought there in terms of potential winners and losers. What we're going to do now then is have a question and answer session. And so hopefully you've been given some thought to areas of particular interest you want to direct to members of the panel. I thought I'd start just with one question to you all, but perhaps Ian, you in particular. I was struck by some of your let's call it provocative thoughts in terms of the prospect of face-to-face financial advice. So if I go into one of your branches now and ask to see somebody, what happens?
The answer is, can you hear me? The answer is at the moment, if you go into one of our branches, we'll introduce you to our online proposition. And as I said during the presentation, that's predominantly online driven, although it is also supported by a telephone service. So there is also a number you can call that will help you navigate the site and help you understand what the options are available to you.
And Ed, you kind of showed some statistics to begin with about the kind of life of persistency of assets, and I was struck by the fact that obviously if you're dealing direct with the consumer, those assets tend to stay with you for a longer period of time. So, what role then for face-to-face advice, and what value, and what do you think advisors need to do to demonstrate real value, particularly when there's organisations like Barclays that are encouraging direct activity?
So we absolutely firmly believe there's a place for face-to-face financial advice, obviously in the post-RDR world. It's just going to be in different segments of the market. So I think the points that were made around the direction of travel of where advisors will go, they will likely go to the high net worth customers, and they will likely focus on those customers who have more complex financial planning needs. If anything, the actual demand for advice in the UK should increase. So the peak time in which an individual wants advice is at retirement. If you look at the wave of individuals who will approach retirement in the next 10 years, there will be significant demand for advice. The big question is going to be how's that advice delivered?
Andrew, what's your perspective?
Yes, so I think that links to one of the things I was saying with the workplace, because absolutely in terms of at retirement people need advice, as has been shown. That's when people can make mistakes. They just immediately invest in annuities provided by their pension provider. All analysis shows that there's often a 30% differential in terms of what they get when they vest with their existing provider versus if they go into the open market. So that advice, and that's the most natural place people would get that, is in the workplace, because they've got the corporate pension and they get it there. So that's one. And absolutely, I mean, I don't think we'd want to give any illusion that, you know, the need for advice goes down. It just has to be done differently. And as I was saying, in terms of the mass market, that really is, I think, the question, and something I don't think really has been addressed particularly by the regulator in terms of there's pretty much a, you know, we will build it and therefore people will have more confidence in terms of what type of advice is determined and the pricing of that, but just the economics, as I showed, just didn't work in that mass market.
And Ian, just one question for you. I mean, you talk about the importance of brand to attract customers, and can you just kind of expand a little bit on what aspects of brand you think are important? You talk, I mean, certainly, I think you mentioned awareness of brand and the relationship, but where does trust factor in any of that, do you think?
Obviously, trust is a key issue. You know, these are long-term products. People are investing for, you know, a minimum of 5 years, and therefore, you know, they've got to believe that those institutions that they've invested with are going to be around for that length of time. So I do think it is an important factor. When you look at the research, you know, there are those people who have a great relationship with an advisor, you know, and core to that is that they trust the advice they get. You know, unfortunately, the research also shows there's a good chunk of the market who've had encounters with advisors and didn't come away with the experience they expected. So, you know, it is the classic one. You know, trust is difficult to win and easy to lose. So I think for all those players in the market, trying to build that relationship, trying to build that trust will be critical in the future.
Okay.
I think just on that, I think it's very interesting, because whenever you know, surveys are done and people are asked, you know, where do they look for advice, not in a technical term, but sort of information, you know, as you know, sort of friends, relatives always comes up very highly. And with the growth of social media and the fact we've seen, particularly in the fashion world, you know, Twitter, etc., when a hot product, dress suit or whatever it is popular. You know, it's absolutely sold out. And how you harness that, because obviously these are long-term products, and therefore, but are people sort of going to go with the flow, and therefore Barclays is suddenly, you know, very popular, gets on Twitter, Facebook, and therefore people start investing, you know, their ISAs in Barclays.
I think it's a really interesting world we're in, you know, where, you know, there is very tight control on regulated advice. But you're absolutely right, Andrew. You know, most customers go out and do actually talk to somebody before they purchase. But as you say, it's family and friends, and increasingly, effectively unregulated advice in the public space. You know, through Twitter and through other social media, you know, people can stand up and can push products and recommend products outside the regulatory framework. And I think that's kind of one of the really interesting challenges. Is it's difficult, you know, when customers walk in, you know, and start asking detailed questions. You know, if you're trying to stick within the rules of just delivering an execution-only service, when others can actually, you know, write whatever they like in the media, without regard to the regulation.
Yeah, I'd agree that change in consumer behaviour is one of the most, I guess, fundamental impacts outside of the RDR. So I always use the analogy of going to see a doctor. So 20 years ago, you'd gone to see a doctor for a professional opinion. Now what do people do? Well, they self-diagnose. They search on the internet, they ask friends and family, and actually what they go to is the doctor for that reassurance of second opinion. And that's a pretty fundamental impact, whether you're a financial advisor or a product provider, how you deal with that change in consumer behaviour.
And trust can be quite personal, can't it? If someone has had a long-standing relationship with a financial advisor, their perception of financial advice tends to be much higher than if they've not previously engaged, so that the view of an individual tends to be more positive than the view of the profession overall. So that's a real challenge. So let's throw it out to the audience then. I think there's a roving microphone that should be available there at the back and at the front. So any thoughts or perspectives that people would like to question the panel with? Yes, a gentleman there on the right, just over by the pillar. Perhaps if you could say your name and your organisation as well, please.
My name's Chris Clark. I work for an investment company called MSD Capital. I'd just like to ask Ed, he's mentioned that persistency is a key to profitability for fund managers, and persistency is a function of the relationship with the client, and that seems to be getting wider. What's Fidelity going to do about that?
Well, Fidelity obviously today runs a pretty diversified business. So, you know, the fact that we are already direct-to-consumer, financial advisor, we run a platform business, you know, that helps us manage that spread of you know, different types of customers and different dynamics of distribution. So, you know, one of the well-diversified businesses is you know, one of those aspects of helping to manage you know, differences in persistency and asset life. You know, like a lot of asset managers, another sort of major sort of development theme for us is, you know, increasing investment in our solutions offering. So over the last 2-3 years, it's been an area of major focus. Because one of the things that we do find is, whereas sort of traditional asset classes are absolutely exposed to those sort of persistency measures that I highlighted, those solution-type products have completely different dynamics. And the challenge for any asset manager going into that space is it's a very, very different process from traditional asset management.
Thank you.
Just come on to that. But does that mean you're going to go directly to the consumer?
Well, today we have very clearly we have a direct-to-consumer proposition. Today, absolutely, it's non-advised.